We chose these three speakers because they represent each part of the debate. These are important stakeholders. They are doing this in a private way, in a public way, and in a policy way. So you all know Dante Disparte from Circle, Rohan Grey from Willamette University College of Law, Caitlin Long, of course, of Custodia Bank. But I'd like each of you to, from your perspective, kick things off and answer this question and start framing it for the audience. Who should be allowed to issue digital dollars? Rohan, I'll kick it off with you. From your perspective and your framing, how do you regard that question and the thinking?
Yeah, well, first of all, thank you for having me. I know as a minority person who's not representing a company or product here, my role is to be the resident pet skeptic and give the appearance of a real debate rather than a self-congratulatory industry love fest, or if I can borrow a trademark, maybe a bit of a circle jerk. I also understand most people see me as the enemy of crypto and probably likely to discount what I think, which is also fine. Although my work focuses on public sector institutions, I really do support the broader resistance against Big Brother as well as Wall Street and Silicon Valley, and I support the long history of tech advocates, freedom fighters, and cypherpunks working to build technologies that are outside the purview of governments and totalitarian regimes. I support that history as well as the idea of keeping a bleeding edge of financial innovation. So in that sense, I like the fact that this conference's title is a festival for a decentralized world. But I want to be very clear, the debate over the digital dollar has absolutely nothing to do with decentralization, and anyone that says otherwise, I think, is not being honest, frankly, because and understand it's going to be impossible to get people to believe something when their income depends on not understanding it, but I hope there are enough true believers out here to be able to tell the difference between DeFi and a stable coin. So let's be clear what a digital dollar is. It's an instrument that's denominated in the government's unit of account. It's recognized as legally acceptable in payments by the government. It's intended to be issued and used in all the ways that public money can be issued and used. It's issued by licensed, regulated entities under the approval of the government, and its safety is ensured at best by government deposit insurance and at worst by assets that are issued by the government and backed by the full faith and credit of the government. And so what we're really having a debate right now is whether or not private sector for-profit actors should be vendors for a public good, whether they should be outsourcing the issuance of digital dollars to private for-profit actors in the name of markets, in the name of decentralization. And in my view, at least, this isn't the model of crypto, this isn't the business model of DeFi, this is the business model of Halliburton. And we should be very clear about the difference between private for-profit actors providing public goods for their own material benefit and actual public goods. So who are the people who want to issue a digital dollar if not the government? We're talking about licensed limited liability companies backed by venture capitalists, many of whom are standard Wall Street actors. We're talking about people with a fiduciary responsibility to a particular group of shareholders. We're talking about decisions being made on behalf of the public by private individuals who are there only because of their capacity to hold wealth initially. And those actors will then be lobbying for laws favorable to themselves in government and creating the same revolving door that we've seen with Wall Street for decades. So the alternative for me is that if you want to have a DeFi system, if you want to build private currencies, more power to you. But if you want to come for public money and providing public goods, then it should be issued by the public on a not-for-profit basis by people who are democratically accountable. And if that isn't what you're interested in, please go work on DeFi. But don't come for public institutions and pretend that what you're doing is decentralized finance. It's not.
All right, the gauntlet has been thrown. There it is. All right. Dante, pick it up, throw it down.
Well, I mean, first of all, it is great to finally meet Professor Grey in person, and of course to share a stage with my dear friend Caitlin Long. So for those who know me, I've had a front row seat in the future of money, payments, and future of central banking conversation all around the world. Before the Libra project was announced, buried in the annals of the central banks of the planet and the technocratic institutions that Rohan so profoundly defended, was this notion of a central bank digital currency. A central bank digital currency is the equivalent idea of the FAA in the United States building jet engines and flying planes. We would have a very unsafe sky with no competition and only one choice. That's not only anti-Western, it's un-American. And so I think it's a preposterous idea. It took Libra, however, and this is how I got my front row seat and how I earned my spot on this stage. It took Libra and a project armed with nothing other than a white paper and some of the largest technology companies on the planet with a somewhat fraught reputation to suddenly turn the CBDC idea into the only thing the central banks of the planet ought to do. Today, 105 central banks around the world are prototyping a central bank digital currency, which is effectively the public delivery of a digital currency. Very few, if any, are actually in production except for China. And so if the only model is for the West to out-China China, is to have a censorship-driven form of money that is gobbling up your PII, your personally identifiable information, and turns a central bank into a retail bank, I think we have a problem. And I think we have a problem that is massive, it's undemocratic, and it doesn't recognize that 95% of all money in circulation on the planet today, the kind of money you and I enjoy and that we could transmit to one another, rides on private rails. Those rails and the big systems upgrade that we're trying to provoke as a company and as an industry, this is why we're all here in Austin at Consensus, is to build it on non-proprietary financial markets infrastructure, AKA blockchains. We live in a world where the idea of device-centric banking and payments can empower people to have a democratic revolution in assets, a much more participatory form of capital markets, and a freer means of transmitting money. Circle is not doing this as an academic abstraction. We're doing it for real. USDC is a $50+ billion digital currency. The reserves are in the American regulated banking system. We have a model that doesn't need FDIC insurance because there's no fractionalization. It's a model that would make the traditional banks blush in terms of prudential standards. And that has powered, last word, trillions of dollars of real-world economic activity that is bridging DeFi, CeFi, TradFi, and real-world empowerment and a developer revolution to accompany that. That's real. That's the way you compete and not only compete, but win the digital currency space race that I think Rohan just so rightly described, but I don't think the answer is a public sector-only approach.
What are the 50 Shades of Grey, Caitlin?
That's a good analogy. Thank you. Well, it won't surprise the audience or the co-panelists here that I vehemently agree and disagree with multiple things both of you said, which is why this is such a good panel and why Angie put us in the order that we did. The problem with a government version of a digital dollar is that the entire reason why our industry exists is because the technology of the banking system atrophied. And it is not by far the best technology for moving and settling dollars. The ACH system is 50 years old. The FedWire system is not much newer than that, and there's been nothing created since then. And so if we are going to hand this over to the government, which, by the way, has been working on FedNow for the Fed's Faster Payments Initiative, has been, I think it started in 2014. Here we are in 2022, and maybe FedNow will come out in the next year or so, but no one really knows exactly what it's going to look like and what the details are. If FedNow had existed, I don't think stablecoins would exist at all. And the reality is that the traditional banking industry is a monopoly. It's been coddled. This is where Rohan and I would absolutely vehemently agree. It's been coddled. Its profits have been privatized and its losses have been socialized. And because the Fed granted a monopoly to a small number of technology providers, these are the FIS's, Fiserv's, Jack Henry's of the world, about 15, 20 years ago, every single bank, except for the very largest ones, has to use one of those approved integrators. What happens to monopolies when they're granted by a government agency? The technology atrophies. Now, we haven't talked about privacy as well. We can probably talk about that. Who's better at providing real privacy, which I think, especially for the US with the dollar, does matter, because there is definitely an aversion to having the government have access to every single financial transaction that you ever do. But I have news for you, for those who think you have financial privacy today. You don't. The banks have every transaction that you've ever done, and they will give it to the government if the government comes calling. And so there is no privacy today, but there's a perception of privacy. And then I would also add that the problem with this is where Dante and I would disagree, that the problem with the notion that non-banks can issue dollars is that the Federal Reserve has been given the right to do that, delegated by Congress, where Rohan, I'm sure I think you support the US Treasury directly issuing the CBDC and having no banking industry whatsoever, if I could paraphrase. You basically set up the argument for why the Fed shouldn't exist from the left, right? And here, what's fascinating is that Bernie Sanders and Ron Paul, I think, would absolutely agree on that assessment of the world. You actually have a lot of overlap in that part of the political spectrum on both sides within the United States. But here's the challenge. The Federal Reserve does exist, and it does have a monopoly on the dollar. It's been granted by Congress. That would have to be reversed in order to change this. And so if the Federal Reserve decides that you have to be a bank in order to clear and settle US dollars with the Federal Reserve, then that's it. And every single US dollar that is transacted, including in the stablecoin universe, except for the algorithmic and crypto-backed stablecoins, ultimately clears through the Federal Reserve, and the Federal Reserve does have a say over that, like it or not.
Let me just blow some oxygen onto this fire that is burning. And the question, I think, from just an outsider looking in internally on this debate, some would say, well, if the government is supposed to take the lead, why did the innovation happen in the private sector?
Because the entire private industry spent years hamstringing the government from providing basic public goods. The same people who say that private actors should be providing this are the ones who lobby against postal banking, who lobby against the creation of something that would provide these services directly. And the Fed has been holding off on FedNow because the banking industry has been telling them that they should be in charge of payments. So do we really think that the stablecoin industry, 10 minutes after they become the next dominant issuer, isn't going to do the same protectionist crap that the existing banking industry have? This is my problem, because I don't like the Fed. If I can swear, fuck the Fed. But the idea that they're the only ones issuing a dollar right now is not true. The Treasury issues coins and notes. That is the only form of genuinely anonymous, privacy-respecting money average people have access to. That's the thing we should be leading into. And the Treasury doesn't have the same ideological commitments to the banking industry or to the emerging stablecoin industry as the Fed does. So I don't think that the answer is to keep it purely private, but I also don't think that the status quo is the right way either, because we've had 40 years of public neglect.
Ooh, pick me. So listen, this is the part where you lean in and you kind of do the crypto explainer-in-chief job. If I told you that the best innovation you could have today for the transmission of value in a global economy that is always on and where your financial needs do not take bank holidays is government-funded digital money from a government that can't build healthcare enrollment websites that work, I'd tell you you're in trouble. Yeah. Instead, I'm going to tell you that, like all things that we enjoy, because you've won the birth code lottery, presuming many of you are in the United States or many of you got enough wherewithal to fly here, that if to be banked hinges on that operating model, we're in massive trouble. Massive trouble. I spent the better part of my career in the risk and resilience and national security domain. Just left FEMA's National Advisory Council. The world's fortress nation couldn't move money fast enough to the people who needed it most, and we moved $7 trillion of taxpayer-funded money through leaky, antiquated, monopolistic pipes. Yep. What would have been a big difference maker? Instant, fast payments on private sector rails that preserve privacy and preserve the air gap between the central bank, your wallet, and your money. That's a feature, not a bug. Stablecoins, like the ones we're promoting, and the idea that there should be that separation of church and state in banking is a very powerful feature.
And then we take a look at what happened in Japan and their recent passing of the stablecoin legislation, in which they are engaging with the private sector, the banking sector, and creating the guardrails in place and really kind of creating a platform that mimics what you hope to achieve. In your view, is the United States going to get it right? How, in your view, is there a hybrid solution?
Well, the real question comes down to who's doing the onboarding. If the central bank wants to open 350 million accounts for every one of us, plus hundreds of millions of business accounts and handle the onboarding, the customer service, the statement provision, the BSA, Bank Secrecy Act, Anti-Money Laundering, OFAC, then great. But the Federal Reserve is structured, and most central banks are structured to serve only the banking industry. And there's a reason for that, because they have made the choice to delegate the onboarding and the customer service to the private sector. Now, the debate could very well be that those should be utilities without privatized profits and socialized losses. And ultimately, I'd be fine with that as someone who started a bank that is designed to fit within the existing structure of the regulatory regime in the United States. And this is the thing that I think the Federal Reserve has not. Well, I know there are people inside the Federal Reserve who have recognized that about Wyoming, what Wyoming did. Wyoming handed the Federal Reserve a means by which to integrate this industry into the existing banking system without needing to pass new statutes through Congress. And Wyoming did that all right up the middle of the fairway, handed with a bow tied on top and a cherry on top, to mix metaphors, and it's still being rejected. And the real question is why?
So if we are to build a federal-backed coin, a stable coin, who's going to build it? Where are you going to find the talent? Are they going to come from the private sector? Are they going to be federalized?
I have no problem with private sector initiative. Right now, the people who design coins and notes and the security that goes into them are private actors. The difference is the government buys that technology and runs it itself. It doesn't hand over the data system, the platform, to a private actor. And I think the example of the Obamacare website is a great one. There are plenty of countries in the world that provide good public healthcare websites. There's a reason America doesn't, and it might have something to do with the massive for-profit healthcare industry. And similarly, when we look at the airline industry, they broke the Air Traffic Controllers Union because it was too important to let private actors do their own thing and strike. They bail out the industry every time because it's too important to let it fail. So if we're going to be creating a crony industry anyway, we might as well just socialize the damn thing from step one. And we can do that by bringing in private innovation. We just make sure that the thing that actually gets produced gets purchased and owned by the public for the public.
So what are the rules in place in your view?
It should be open source. It should be all auditable. It should be a standard-based rather than a proprietary or single company-based technology. It should be hardware secured so that you're not keeping a ledger or generating any data, so that we can preserve the existing privacy of cash that we've had for thousands of years and are slowly about to lose because all the people that could be doing something about it are so busy focused on crypto that the central banks are killing cash while we're sleeping. And that we would actually have a serious lobby interest to protect the right to cash, which exists and is under attack right now with physical cash as well, which is why activists in Philadelphia are passing laws saying we should have a right to use cash. So I think it takes technical solutions and legal solutions with a political coalition behind it. And sorry to be a bearer of bad news, it's not going to be private for-profit companies to be leading that charge.
But has the train left the station?
Well, I think Professor Grey just made a terrific argument for what I'm quite sure that the banking core providers argued for, why they needed a monopoly on banking core systems 15 or 20 years ago. And look at how much they got fat and happy over that ensuing 15 or 20-year period, and the payment systems of the United States atrophied. I have zero confidence that either the government granting itself a monopoly or granting a small number of private actors a monopoly will result in better payment rails, especially when you look 20 years out.
And the value proposition has already been set, one would argue, by the private sector. This is outside of any government initiative or even DARPA, perhaps, that this initiative really came from the throes of the global financial crisis. And one could argue that the United States government was the primary instigator of that. And the private sector responded, technologists responded with innovation that created a parallel response to fundamentally what has been institutionalized financing. And so where do you then sit, Dante, as you kind of navigate this space, how the market is speaking? And if the market is speaking, what do they want? And how do you build to serve that?
Yeah, well, physically I sit in the middle, and on the question I also sit in the middle. And I don't mean that to be cheeky. The fact is, free market innovation is the thing we have to fight for. And the word free is not just about the liberty to participate. This industry in crypto may not be right for everyone, but everybody's rights to join and participate should be protected and enshrined. And I think that is the single most important technological contest of our times. And I think along the way, what we're proving is that it's no longer an abstraction. That if every single internet-connected device on the planet could become a compliant payment endpoint, then you don't have to move money across borders. It's preposterous. You don't send a cross-border email, but rather you interact freely with trusted counterparties. We're now doing that with finance and all of these incredibly entrenched industries that Caitlin and Professor Grey have described as monopolistic, the privatization of gain and socialization of losses to trillions of dollars. Crypto is a correction from the 2008 financial crisis. And since then, we have been making steady gains across all of the asset classes that we're talking about, despite the roller coaster rides, despite the fact that crypto now has enough heft and presence to show up in Washington, and that we cannot buy insurance when our house is on fire. I've never been more optimistic than ever that that operating model that has played out with the first and second generations of the internet will play out with this one too. That's why you're all in Austin. You came here for a reason. There's trillions and trillions of dollars of economic value waiting on the sidelines for regulatory clarity, but we're not asking for permission. We're doing it.
Some of us are asking for permission.
Well, if you're not asking...
And how's that working out? It's a tough spot, Caitlin. Please describe it, because this is the real champion on the stage, frankly.
Look, I must say thank you to everyone who's been running up to me, thanking Custodia for suing the Fed this week. I'll leave it at that.
No, I don't want you to leave it at that. Dive deeper. Why? Why that conviction? And what do you want to set in terms of precedents and narrative for future rails for how we interact with our banks?
Well, I'll leave the lawsuit to speak for itself. Obviously, I can't speak for the lawsuit. But I'll step back and talk about the vision of the state of Wyoming that Custodia is following to try to get the door open. We recognized that the Federal Reserve, because every dollar ultimately clears through it, they could shut the fiat-backed stablecoins off today, and the industry would die. Because they have the ability to lean on the banks to say, stop providing US dollar banking services. And by the way, there are proposals in Washington, D.C., and some evidence they're already being implemented by bank regulators to do just that.
And other jurisdictions around the world have instigated that strategy.
That's correct, because the central bank controls the clearing of the fiat currency. Yeah. And so by this industry walking with its feet to say, I want a US dollar issued on a public permissionless blockchain, that's a powerful concept. And there's an estimate that $2 trillion of traditional bank deposits in the United States have already migrated out of the traditional banking system and into the crypto system, and they will probably never come back, especially because a lot of this industry, as you know, skews young in demographics. And if somebody who's never had a bank account is still able to transact using crypto, they may never open a bank account ever in their lives. May never set foot in a bank branch, may never actually write a paper check. They've already moved beyond it. And that's a powerful concept. But again, what did Wyoming do? This is a multi-year initiative to try to figure out how to marry these two systems. And the Lummis-Gillibrand bill very much has the Wyoming structure in it, and it's endorsed by the senator from New York. That is a powerful concept. What does it do? It says you have to be a depository institution in order to be able to issue a dollar. This is exactly what we have today. Now, there are some depository institutions, including Custodia, that have not been able to get in, and that's the interesting question. Why? Because this structure has been presented to the bank regulators in Washington, D.C., and it fits exactly into the existing regime. They don't have to change what they're doing now. You just have to be a depository institution. Okay, great. If the federal government is not going to issue depository institution licenses to the circles of the world or to other applicants, okay, fine, the states will. And that's what's happening. And New York and Wyoming have locked arms on some very interesting aspects here, both through our senators in Washington, as well as through the state initiatives at the state level. In the United States, to be able to issue a US dollar that is recognized by the Fed, you have to have a bank charter, and specifically a depository institution charter, and that can only be issued by either the OCC, the Office of the Comptroller of the Currency, which charters national banks, or the 50 state bank authorities. And that's what Wyoming did. We did that. We created the statute. We created the rules. There's a 752-page supervisory exam manual that was co-created with Promontory. It was as up the mainstream as possible. Those of us who are trying to get the door open literally did everything by the book, all the rules, asked for permission, checked every box, complied with all the rules as the traditional banks. And Custodia went above and beyond and also applied to become a Fed member bank. And we had to sue the Fed this week.
You know, it's the most powerful revolutions are actually evolutions. And each one, in my view, has had a very important role to play. At the end of the day, when we talk about stable coins, you have to pull back, and we do with a global viewpoint, that with China's 7 now going on 8-year head start on CBDC, the ECNY, it's beyond pilot phase now. There's a soft rollout. Even if they have not officially called it, the beta is now being used across the country and potentially around the world in terms of CBDC migrations with other trading partners. So then you take a look at stablecoins and the role of stablecoins politically for the US government that has not had a very strong thesis when it comes to digital dollar and has been pressured and pushed by the market. And so is there a role that stablecoin has already played by default in providing that one-to-one perception of the US dollar in a digital form that allows it to almost leapfrog and engage while CBDC innovation has been happening all around it for years. And now with stablecoins and this huge market, the market is demanding that it be a US-backed stablecoin and not a Thai baht or potentially a Japanese yen. Your thoughts here?
I'm sure Professor Grey has something to add here too. Simply put, I wrote an article about this, not in the venerable pages of CoinDesk, but in Project Syndicate, telling the counter-narrative. The narrative up until very recently, and Secretaries Yellen and Chairman Powell were under massive pressure to try to out-China China, because we do not have exactly the same instrument that imperils people to privacy erosion and then makes you and I as taxpayers pick up the cost of a science experiment on the movement of money. The real breakthrough innovation is the rails. A CBDC is like building a high-speed train, but not building the rail network. Public blockchain infrastructure for always-on, safe, device-centric banking is already a phenomenon. USDC has powered trillions of dollars across multiple public blockchains. That underlying set of activity, that creative destructive cycle, is exactly the type of a long-range win that will tell a very different story 5 years from today. And Fed now, Fed when? All of these innovations are masquerading as domestic real-time gross settlement systems. A CBDC is a domestic payments innovation. A stablecoin flows freely on the internet. It's flat. It's internet money for Thomas Friedman's hot, flat, and crowded world, and it's no longer an abstraction.
Is it black and white, Professor Grey? Are there?
It better be gray.
Yeah, that's right. Shades of grey. That's my entire carear.
I'm just saying.
The gray is very, very solid color.
I'm going to leapfrog so that Caitlin's now in the middle. But I think the reality is, you say we're not asking permission and that we're just going to do this through free markets, but you're a limited liability company. If you go under, the public's on the hook for your losses. You're getting a license for being a stablecoin issuer as well, just like Caitlin. And the reality is, if you're going to ask the Fed for permission, this is the same entity that is corrupt and is captured, why do you think that they're going to be a vehicle for savior here? If your vision of this is that the politics are a big bag of money plus asking the Fed is going to create freedom, I don't agree with you. We're going to need to have the same kind of political agitation and grassroots activism of people who have real concern for these things, not profit-seeking as their primary goal. And when it comes to free markets here. The free market solution is do your DeFi thing. Dare the government to try and censor you and I'll help you resist it. But this is not free market capitalism. This is just a new generation of crony capitalism, and that's exactly why the Fed is ultimately going to be fine with stablecoins, because it's going to serve the same role.
They don't have a business if customers don't use them.
Beg your pardon?
They don't have a business if they don't have customers. And
Sure,
so
but Facebook has a business and is hurting its customers on a daily basis.
Inherently, is the market responding in that way?
The market is responding to a failure to provide a public good. And until we provide that public good, these secondary suboptimal alternatives will always look more attractive than the status quo. And I think they are more attractive than the status quo, but they're still incredibly unattractive, and we don't have to constantly live within that binary. We can do something different. It's just going to require getting beyond narrow self-interest as the motivating force for social change.
Well,
if I could, just very briefly. So when someone created the check and allowed people to create the denomination of a piece of paper like they could send to someone that had a denomination greater than $1 or any other dollar, it didn't replace the need for a physical dollar. It just added extensibility to the dollar. A dollar in tokenized cryptographic form is doing exactly the same thing that ACH and Visa and SWIFT and a check did. It's a payment systems innovation. It's about the movement of value, not the displacement of the monetary sovereignty of nations. And that argument that CBDCs and stablecoins are locked in a death match has to stop. And hopefully today we find a little bit of peace.
Caitlin, you are the peacemaker suing the federal government. But what is your vision for peace? Because if it is to be an evolution, if there is supposed to be coming to the table all parties, all stakeholders, that include us as the average citizen. In your view, what is that?
I'll close on an optimism note, because I do believe that that issuing the US dollar digitally through the banking system on rails that are updated, as in not FedWire or ACH, something that's based on open API, cloud-based architecture, open and permissionless on the back end. That is a powerful concept. I do agree, and hat tip to Nick Carter, that does extend the dollar's reign as reserve currency. Although what we see happening, and here's where I would agree with Professor Gray, the traditional, the DeFi world, and by that it started with Bitcoin, is growing up independently. The challenge is that if you don't have ways for capital to move back and forth between the independent new DeFi financial system and the traditional financial system, then it's not as easy for DeFi to catch on. There do have to be rails that go back and forth. And what's fascinating is that by trying to lock this industry out of the banking industry, what has happened, $2 trillion of deposits left the traditional banking system for the DeFi world and probably will never come back. And that is a regulatory mistake the US has made. The US should be embracing this new, better payment rail, better technology, as a way to extend the dollar's reign as reserve currency. And that's why the regulators, I think, have really missed the boat in not recognizing that the states, and again, New York and Wyoming, keep an eye on that axis. The states, the two most powerful states, one in TradFi, the other in the crypto world, that have created this regulatory structure and have handed it to Washington, D.C. And let's see how tough it is for Washington to embrace that.
The fire has been fully stoked. You heard from our panelists each side of the debate, and then some, to be sure. But to use the fire analogy, we are looking at a forest fire of devastation that either is a tragedy, obviously, from one perspective, or clearing the brush for new seedlings to grow. How that forest is going to look is anyone's guess, but from these three perspectives, I think it is very clear that we can see the forest from the trees. So thank you, all of you, for sharing the perspective, and thank you too.